Hey, welcome back to XRP Future Finance. If you've been holding out for crypto to rip higher the way it always has before, today's story might change how you're thinking about that. Bitwise's chief investment officer just said something that's worth your full attention, and we're getting into it right now. Matt Hougan sat down with CoinDesk recently and laid out a take that's a bit different from what most people in this space want to hear. He's been a Bitcoin bull for years, so this isn't coming from someone who's turned skeptical. It's coming from someone who still believes in the asset, but is being honest about how the next phase of this market might actually unfold. And his message is pretty simple. The next bull run probably won't look like the ones we remember. It's likely to be slower, calmer, less of those wild swings that made past cycles so addictive to watch. Why the change? Hougan says crypto has lost some of the spotlight to other trends, and right now, artificial intelligence is soaking up a lot of that attention and capital. He told CoinDesk that the coming bull market will likely move slower and with less volatility than what we've seen in past cycles. Coming from a guy who spent years on the bullish side of Bitcoin, that's a notable shift in tone. But here's where it gets interesting, because this isn't a story about Bitcoin losing relevance. Hougan was clear that registered investment advisors, the people managing money for wealthy individuals and big institutions, are more locked in on Bitcoin and crypto than they've ever been. He said interest among that group is as high as it's ever been, and he reads that as a strong signal for where things are headed long-term. So where does he think Bitcoin's price actually goes from here? He's sticking with his long-standing call that Bitcoin pushes past $1 million within the next decade. That part of his outlook hasn't budged. What has changed is his confidence about the path to get there. He admitted there's real uncertainty about how this plays out, when it happens, or whether Bitcoin has already found its bottom. His honest answer is that we just have to let this 4-year cycle run its course and see what it shows us. That uncertainty isn't unique to Hougan either. Right now there are several signals floating around the market, and a lot of them contradict each other, all claiming to point at where Bitcoin's bottom might be. Some analysts think it's already happened. Others are leaning on on-chain data that has historically caught the bottom of every previous cycle. And then there are simple technical indicators that nailed every bottom going back to 2015, yet still haven't triggered this time. Nobody has a clean answer right now, and that's just the reality of where we are. Let's get into the numbers because they paint a clear picture of how rough this stretch has been. Bitcoin is sitting almost 50% below the all-time high it set back in October. It's down 26% for the year. And if you look at the broader market through the CoinDesk 20 index, the damage is even worse, down 34%. This isn't a Bitcoin-only story. The pullback has hit pretty much the entire market. Tokenization-focused chains haven't escaped it either. Stellar has taken its share of hits during this stretch, but its native token, Lumen, has actually bucked the trend and climbed almost 9% this year. In a market full of red, that's a number worth noting. Now here's where the real shift is happening, because stablecoins are having a moment. These are tokens pegged to something stable, usually the dollar, and their combined market value just hit a fresh record of $322 billion. For context, that's larger than the foreign exchange reserves of 95 different countries, including some developed economies. That's not a small milestone. And the growth story doesn't stop there. Citi has projected that the stablecoin market could reach $4 trillion by 2030. That's the kind of number that gets serious attention from traditional finance, and it's a big part of why so much institutional focus has shifted towards stablecoins and tokenization lately. So does that mean this shift is the reason crypto prices have dropped? Hougan doesn't think so, at least not as the main cause. But he agrees with other Bitcoin maximalists, people who believe Bitcoin is the only crypto asset built for lasting global adoption, that this shift is at least adding pressure and slowing down how quickly the market can recover. His explanation for why makes a lot of sense once you think about it. He said that during bear markets, when doubt is everywhere, people tend to gravitate toward things that feel more tangible. Stablecoins and tokenized assets just feel more grounded and real to a lot of investors compared to Bitcoin, which can still come across as abstract to people outside this space. What we're really looking at is a market that's behaving differently than it used to. Tokenization is bringing real assets onto the blockchain. Stablecoins are becoming a genuine link between crypto and traditional finance. And AI is pulling in attention and money that crypto used to have mostly to itself. None of that means crypto is fading. It just means the dynamics are shifting. So if the next bull run does end up slower and less explosive, that's not automatically a bad outcome. Slower growth often holds up better over time, and for people thinking long-term, that kind of steadier path might actually be healthier for where this market is heading next. We'll keep tracking how this cycle plays out and bring you the updates as they come. Read it.